Hey everyone, it's Connor MacDougall. I'm back for another monthly housing market update for the Tri-Cities area. So if you're thinking about buying, selling, or just want to find out what's going on, stick around because I'm going to give you all the latest info on what's going on. So for September, we did see the average sold price jump up to about 473,000. We also saw the median days on market increase to 15 days from 10. Which is a little bit strange because usually those two don't go together. If prices are going up, usually there's more demand, so the median days on market is going down. The important thing to know is that the houses that were closing in September were actually purchased and went under contract back in like kind of August, maybe even July, depending when they're closing. And why that's important to note is because in August, we did see interest rates drop into the high fours if you had a point purchased, low fives if you had no points. So interest rates did drop down to what we're calling low now, which is the low fives. So anybody who bought a house at that time had a little bit of extra budget to work with because the interest rates were lower. Now the interest rates have come up. We should expect the housing prices to possibly decrease a little bit in October because people can't afford as much. A good rule to go by for a rough calculation is that for every 1% interest rates go up, you actually lose 10% on your purchase budget. So if you were looking at a $500,000 house and the rates went from 5 to 6%, you're now looking at a $450,000 house with that same monthly payment and down payment. And because the rates have gone up almost 2%, that $500,000 house is actually even starting to look more like a $400,000 house now. Obviously, with those interest rates rising as quickly as they have and getting up into rates that we haven't seen in quite a number of years, combined with the rising price of homes, we're seeing an affordability that's much lower than we've seen in the past. But what that does present for buyers is if we start to see housing prices fall slightly with those higher interest rates, if you're able to get a house at a lower purchase price, even if the interest rate's high, if you can afford it for now, if those interest rates come down in the future, that allows you to refinance and have a lower payment and probably more equity too. If the rates come down, the average value of a house is probably going to go up. It also means that if the rates continue to climb up, if we see rates in the 8s, the 9s, up in the double digit, that means that you made a good decision because you bought in before the rates went up that high. Average home prices tend to shoot up and then be very slow on the way down. This is because when people have money available, there's lots of demand, it's very easy to pull the trigger and overspend. Whereas on the other side of things, sellers are a lot less likely to sell their house for less because that is their biggest asset in most cases. A lot of the times people don't want to part with it for less than it's worth, and it takes people a while to come to terms with the fact that their house is worth less than it was a few months ago. So that's why prices tend to skyrocket quickly and then be very slow when they come back down. West Richland's one that's worth talking about too, because as you can see, there was a huge jump between the average sales price last month and this month. That's due mostly to the fact that 7 of the 21 homes that were sold and closed in September were new builds, averaging over $700,000 in sales price. So when you get a third of the houses being brand new homes that are costing that much, it is going to bring the whole average up. So as you can see on this inventory chart here, right now we're actually on pace to have more inventory in the winter, which is generally the slow season, than we've had for the past 2 summers, which is a great thing because if buyers are first-time buyers, especially if they're looking to get into the market, you have a lot more selection than you've had in previous years. And because of the interest rates, you also have a lot less competition. So if you can afford to get into a house right now and it's something you can manage and something that you want for your life, not necessarily as a financial decision, then this could be a great time to get in while you don't have a lot of competition and then possibly reap the benefits in the future if interest rates go down at some point or if the housing value goes up and you're able to refinance later on. That's not always a guarantee that you're going to be able to refinance and drop your payment, but it is definitely a possibility. And again, we're talking about that lower demand causing a higher median and average days on market. This is a good thing for everybody. Having a house go on the market and have 10 offers in the first 12 hours is not fun for anybody really. Even the sellers get stressed out because they have so much to dig through and so many decisions to make on which offer to take. Even though it may seem like a good idea at the time on the selling side, really having the higher median days on market allows the property to sit, it allows people to come and see it, makes decisions that aren't rushed. When you're looking at a $500,000 purchase, to have to make that decision in 4 or 5 hours is a lot of stress on people. And there's actually a lot of people who bought in the pandemic quickly and are now regretting their purchase because it's not exactly what they wanted and they realize that they pulled the trigger too quickly, they got FOMO, whatever you want to call it. So being able to take the time and really decide whether a house is something you want or not and mull it over for a few nights has been really helpful for a lot of people who have bought in this recent market. This week was helpful and you liked the new format. It's a little more just kind of round table and me talking about some of the major points in the market rather than going through every line in detail. If you liked it the other way, or if there's any details I missed that you'd like to hear about, please reach out. And if you've been enjoying these videos and you're not already, please subscribe to the channel and hit that bell for notifications when I release new content. I hope this was helpful, and I'll see you all again next time.